Good afternoon, everyone. This is Chrissy from Celsius ATR and Balkan Capital Research. Hope everybody's doing well on a Saturday afternoon. I actually got the small cap, the Dow Jones Industrial Average, the Nasdaq, and the S&P up. The combination of those four instruments. Everybody's thinking, because of this reversal, weekly hammer inverted, and we had a weekly hammer up. This may be bearish. As long as we're above that 36,200, I think we are still bullish. We may retrace a little bit and continue higher due to the fact that the small cap, the RUT, is a little weaker compared to the Nasdaq 100 and the SPX, which is the Fortune 500 company, and the Dow Jones Industrial as well. So let's just go down from here by looking at it on a daily chart, and I'm going to put two things on it. Fibonacci, you can see the highs and lows. We tapped into the 61.8, coming back into the 50. We may create, a possibility of a reversal because everybody's thinking this is bearish, takes everything down, unless the sentiment does change and we lose, that momentum on the weekly bar. So let's go look at it on a daily. And on the daily, I left these small ovals here that are the gaps, from the Thursday, Friday gap. There's a small one here. There's this gap here. Can we possibly come back to that 50 simple moving average and retrace back up? Of course we can. Can we fall and continue lower? Yes. If we do a channel, just to give you a better idea, that way we can look at it together. We can take that channel from here, connect it to this candle. At least we have an up channel. Or we can connect this channel, which is up to here, and shows you that we are still in an uptrend. Let's just grab that one there. This one here. We are in a wedge. Unless we lose this area and we lose the 50 simple moving average, then we continue lower. Let's just now go down to the RTY. This is the small cap showing the Russell. And if you notice, we are in an uptrend. We retraced, Wednesday, Thursday was a down bar, which is an engulfing candle of the prior candle up. One candle up, one candle down. On Friday, we opened, we stayed below the Thursday's low, and we continued lower. We tapped into the 50 simple moving average, as well as the 18 simple moving average, where they're supposed to be crossing to continue higher. The Russell is a little bit weaker. We are zigzagging. This is an A, B, C, D, whatever you want to call it. You can start it here, It can U-turn. If it does fall, keep an eye on this channel to hold it as support in order to continue higher. That's the small cap compared to the canary in the coal mine compared to everyone else. Let's take a look at the Dow Jones Industrial Average, YM. And if you notice YM, I did the same thing, and I kept the fib from high to low, and showing that the retracement in the channel, we are right on it in the 18 and the 50 SMA. If this is going to continue higher, we don't want to lose it and come back to the below the 38.2 fib, which is this prior one. We touched into the 50. We looked up, we couldn't get to the 61.8. We had an engulfing candle on Thursday. Friday we gapped down and continued lower due to the weakness, in Apple and Boeing. Let's take a look at now SPX, or the ES, which is the E-mini, and I'll come back to it at the end. This is the S&P 500. If you notice, we have these two LCRs. I have these ovals, these triangles here. This shows the overnight in them. We do have a small gap here. I did not mark. I just left it alone. There's a small gap in here from the Thursday, Friday action. We're coming back to the 18 SMA. As long as we're above the 27.85, I think we are still bullish. If we lose the backside of this, triangle that we broke out of, and we come back to the 50 SMA and get a possibility of a U-turn, keep an eye on that, because the sentiment, everyone's thinking this is bearish to continue lower. I'm not trying to say we are bearish. I'm not trying to say we are bullish. Trade what we see and what is the volume profile given us and the technicals during the day, because this is a possibility of a gap up or a gap down due to the fact on Friday we had a poor low, I'm sorry. It can happen on either side, a poor high or poor low. I'll go into details later on. That's the S&P 500. If I take a look at the /NQ, which is the Nasdaq 100, If you notice, the NASDAQ 100 is way above still the 61.8. We came back, retested this area. We had this over from way back when we came back and down. There's a small gap right here. You can see it. On those days when we fell down, we created an H pattern. We eventually consolidated here for two and eventually fell down. We retraced back up, and if you notice, this channel is no longer, I have to connect it was from here to here. That way we can have a better channel, and this one connected from here to here. I'm going to leave it alone right here. I'm going to edit this one and make it into a dotted line. So what we can do that way when we come back to it, edit the channel, we can make it into small little dots. That means we retested it before. This is why I make it into a dot, and keep an eye on it on the way back up, because it will act as resistance. We do have a small little area here that we have to pay attention to. If we hold the the 18 SMA and the 61.8 to continue higher, this was the prior breakout on the weekly daily charts from 2008 2009, those two channels. We may come back here, act as support, and bounce back up. Let's take a look at now the ES in detail. What I want to do here is break it down a little bit more in smaller increments. If you notice, we have that whole move down, then the whole move back up into the 50 Fibonacci. We cleared the 50 SMA, we cleared the 18, and 18 has been acting as support every time we come back to it. Watch if it falls below the 27 85 and the 2742 area, 47 area. That would be very critical to come back into the backside of this channel if it acts as support in the 50 SMA to U-turn. If it falls for it, look for the 38.2 fib. We're going to trade what we see, not what we think. Remember, the technicals are there for us. Let's go to from the 4-hour to the 4-hour chart. If you noticed on the 4-hour chart, I kept the overnight on for a reason. That will give us, where those gaps are. We can start from here looking up. We had a channel coming up this way, which we retested and cleaned. What we're going to do is connect it from here to this area here. If you notice, we can connect it this way, or we can connect it to this area here, or connect it to that one, which is no longer valid, but I want you to be aware of it. If we connect it in here, we already retested it, so the backside have to be in the 2900 area, so that's why I took it off. So we're going to keep those two here. We have this gap here, and we do have a gap here in the overnight. What we can do is grab a box right here, and we're going to mark it, okay, everyone? So what we're going to do, this is the Thursday's low. This is the Friday's test of the candle. If you notice this right here, come on, get across. There it is. This is the small gap that we have in the overnight. If we come back to it, it's going to act as resistance and support in order to break up and continue higher. If we fall, look for the backside of the 116 SMA and the 50 Fibonacci and 23.6%, which is the smaller range in the chart. So from here, what I want to do, go to style. We're going to go to, from standard, we're going to go to monkey bars. We can use volume profile at the same time. If you notice, this is 3 days, 30 minutes. What I'm going to do is here, break that 30 days into a 5-day, 15-minute. And the reason why I did this, because I want to show you what we did. The POC on Thursday was up here. When the time frame, when we pushed higher, we closed up in this area. We closed more, we opened here and we eventually came to close down here. Most of the time was spent in the morning was up here, but the POC shifted down here. We had a lower distribution from the value area high, value area low, and this is the POC. Here we shifted lower. When we came back in the overnight, if you notice, this is the POC, value area high, value area low, and the POC is here. Where most of the time was spent is up here. If you notice, we closed, in the lower distribution section because, we gapped down on that distribution. If you notice, look where we tested in the overnight, because this has the overnight. If you see it, that 85 in this area, this is a clean top, but the bottom here in the value area low, right underneath the value area low, if you notice, the low here was 28.1175 and the high was 28.7975. If I look at this one, what was the low in it is 28.78, and that was the high of it, 28. 79. So in the overnight we touched each other, but unfortunately, if they take the overnight, we opened in this area and we just fell down and we continued. We had two distribution. We had this distribution up here. We can consider this a puck, and this is another puck. If I zoom in here, just to give you how to look at it, okay, we just got to get rid of that one here. Okay, so we can see it a little bit more cleaner. So this is, one distribution. This is the second distribution. We have a nice clean wick up here, which is a clean top, but we don't have a clean bottom. Whenever we have a poor high, usually it can be retested because people are trying to short into here and they push it a little bit higher to close a little bit higher into distribution to the upside. If I can go from here on a 15-minute and look at it a little bit differently to a 5-minute bar, zoom down a little bit, and I want you to see this. This is actually, when we come back through this area to go back up, this is going to act as, a line which is the first resistance line if we're going to come back through here to up here before we can get, and this will act as resistance up in this area because there's not much contracts, up in this area. If I take the high and low and we draw a Fibonacci, this we got to do this on a Fib. So my high and low, we can grab this area here. The high was 79.75. And the low is 28.1175. We can edit it to adjust it, edit properties. So to make it perfect, you can go 7.5 on each one. This is how you edit it. And we put it back on. If you noticed, where is the 50%? It's in the upper distribution, while on the time was spent is at the same time in that area as well. That 28.45, 28.42 is going to act, as resistance on the way back up if we clear this area. And we closed in this area in the distribution around the 22. If I take the percentage R, this is what you do. You look for where the 50% is in relationship to where the most time was spent, and you extend it to the bottom. We're going to edit this, activate this drawing. We're going to zoom in before I do that. Let's just zoom in. We're going to activate this drawing, the Fibonacci, so we can fix the bottom. Edit proper, but you never know what can happen over the weekend. Activate the drawing, and we're going to look for that 200% down here. Close enough. And we're going to get rid of the other one. Remove drawing. And what I'd like to do, go back from the this distribution. If you notice, the 50 is going to act as resistance, which is the 28.39. 28.31 is the other section, which is a 38.2 fib. That should act as first time coming back up to this area as resistance. So in order to fix the bottom, we have to get to the 28.05 area. But you never know if we gap down, 50, 70 points down or 50, 70 points high in the overnight due to the weekend and the Sunday afternoon. And Californian time, usually it does that. So what we want to make sure, if this happens, during the weekdays, you can, if you get to the poor low or poor high, and usually you get it, because people are trying to go long, you can short it back down, and people, trying to short this area, you can go long into it, into the next day range, because you can, range back up. So if I go back from style, go to chart standard, we're going to change that, from the 4-hour to that 15-minute to show you how the fibs look like. Because we got those fibs right there. We're going to go to a 15-minute 5 days. So you notice there's a lot of noise here. This was in the overnight. We showed you the gap from here to basically down here, which we retested on, during trading hours on Friday. This is the push down coming back up. I should have got rid of the TD ball out of the way because that's too many lines. Edit property, TD ball. Just uncheck it so that way those lines will disappear. And if you notice, when we're coming back up through the Fibonacci, what we want to make sure that 38, when we came back to retest, we tested the 38, and you can see the resistance and support. We got back to the 38, fell back down and closed in this area at the 21, 22 area. That's a significant small puck. We have the other puck, which is a distribution higher. I'd like to see, fix the bottom, continue back up. And that's what I'm seeing on the S&P 500. Let's go from here. Taking a look in at Apple. Apple, it rallied up and in the afternoon fell down and came back up and fell back down into the close. This is why the Dow was weak. And I'll show you because, Amazon, the employees went on strike on Friday at their lunch break. It gapped down and continued lower. Baidu, I'm just going to go through some of them. Baidu, gapped down and continue lower. Let's take a look at Facebook. Facebook, I think it reported the earning. It had a nice move back up, then eventually fell back down to where it started on. This is the earning report. So it's in consolidation. Let's take a look at Google. Google, due to the fact, it hasn't reported yet, keep an eye on Google. It's consolidating for the last 3 days, fell down because, Amazon. Let's take a look at Netflix and FLX, which is reported. Netflix, reported, came back down, and it's in consolidation side range in the upper distribution. Let's take a look at Tesla. Tesla had a weak day because of Elon Musk, tweeting as usual. Basically took, the evaluation of the company and said, what, it's not valued there, and they just hammered it all the way down. Rallied back up, to the 38.2 and fell back down to the 23%. You can see that in Tesla. Let's take a look at Wind Resort. Wind Resort, if casinos are going to come back and everything, COVID-19, they do find a cure, like MGM, Las Vegas, and over time things will turn around. People now are stuck in their homes. They're not allowed to go out. We're prisoned for no reason, I believe. I don't want to sound funny about it, but I just keep my comments to myself. Let's take a look at the BA. And Boeing is in consolidation in a symmetrical triangle. I'm trying to keep an eye whether it touches the backside of this channel to continue back up or breaks through this channel to go higher. Let's take a look at GC gold, and I'll go to a longer time frame. Let's go to daily chart. In GC, when it came back to consolidation, it broke those three tops. Fourth one went higher, came back, retested a little bit lower, went back up to the same area where it failed from. That 54.55, that was the prior high, fell back down to this side of the channel because you had this one. It's got an inverted, hammer. If this channel is lost, I would wait for the 50, this consolidation, and the backside of the 61. I'd like to get it, back in here in GC. Let's take a look at CL. CL has done something oil in the last couple of weeks, which was dramatically beat up. And, people just said, oh my God, oil's going to zero. They wiped out the M contracts and a couple of other, K contracts. We fell down very sharply. That week I grabbed, the $7 to $9 range. It stopped me out on the $9.07, went higher, came back, retested here. If you notice, the low in that contract was $10.07. I was looking, for a $9 range to grab it back up. But we had, inverted hammer. If this is going to act as support and we break through this channel, this prior channel, I think the upper target is here, the first distribution in the 29 and the 50 simple moving average in the 38.2 fib. This is why I'm showing oil. If it consolidates here a little bit and continues higher, that would be great, as long as it doesn't fall below the $14.50, $15 range. So that's for oil. Let's go back to the ES. And note, the ES, fibs, we put them on. So if I take those fibs off, so remember, trade what we see. Oops, what am I doing here? Get rid of the fibs. Remove drawing. If you notice, we're still in this channel. Keep an eye on the backside of this channel. If we hold this channel in the 18, we gap back up or gap down. Trade what we see, not what we think. We have still one more gap here, one more gap here. We do have one big one up here. I kept this marker here just to represent, where we fell from. eventually if we're going to continue higher and things do work out, I'm looking for the 200 and the 116 SMA in this channel, eventually to catch up and go higher, because we retested the 61.8 fib, if you notice, from high to low, and we are still in that 50%, Fibonacci fib. If this is going to hold or not, we'll see what next week brings for us. Be safe out there. Look forward to seeing you on Discord or at Solstice ATR. Ask us how we can help you in your trading to improve it, whether it's on daily basis, weekly basis, swing trading, whether you trade equities, option, futures, currencies, or commodities. We're here to help. Take care.